Ladies and gentlemen, welcome to The Scoop. I'm your host, Frank Chaparro, editor-at-large at The Block. We have a very exciting episode of the show for you today. Joining us on the other side of the mic is our guest, Jordi Alexander, founder and chief investment officer at Selini Capital. Jordi's approach to understanding the markets through game theory has gained him quite the significant following on Twitter over the past couple months. Today, we're going to unpack some of the principles of game theory as they apply to crypto, as well as his own sort of view on the market, where he thinks there's some misconceptions and how he sees the market shaping up over the next, let's say, 10 years. But before we get into all of that, I want to take a moment to thank our sponsors. What's next for digital currency after a brutal 2022? While the core promise of crypto hasn't changed, digital currency is still forming the base layer for a new global commerce infrastructure. From merchants at the point of sale to corporations that want to pay suppliers and even employees more efficiently,
Circle has always seen itself as a connector of the traditional world and the new world of digital currency. It's like building houses. What's the foundation, and can you get the foundation right?
Throughout Q1, I'm happy to host leaders from Circle here on The Scoop to give listeners the chance to hear how one of crypto's most prominent builders is paving the way for digital currency utility. Have you ever wanted to use DeFi without being seen? RAILGUN is a leading DeFi privacy solution on Ethereum. It's also a leading privacy solution operating across Binance Smart Chain, Arbitrum, and Polygon 2. And yes, that includes DEX trading. DeFi and privacy together at last. Visit railgun.org to find out more. This episode is also brought to you by Flare, an EVM-based Layer 1 blockchain with secure, decentralized access to information from other chains and the internet. Flare's native interoperability protocols provide developers with a variety of high-integrity price and event data, including detailed transaction proofs from other chains and information from Web2 APIs. Build better and connect everything at flare.network. All opinions expressed by hosts and podcast guests are solely their own opinions and not necessarily those of the blocks. Podcast guests may have taken positions in the assets or other matters discussed in this podcast. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. For full terms, visit theblock.co/terms-service. Once again, I want to thank our guest, Jordi Alexander, for joining us. Sir, welcome to the show. Thanks for coming on. Sorry if the backdrop is a bit more disappointing than you were expecting, but I just want you to see my face. If it faces the window, then I just get completely washed out by the sea and the potential whales that are breaching the waters. They are migrating back up to Greenland, which is super exciting.
That is exciting.
Do you snorkel? Do you do a lot of deep sea diving?
I'm not. I have done it a long time ago, once or twice.
Your Twitter photo, is that you or is that?
No. I have an NFT Twitter photo.
Ah, got it.
What do you think about these NFTs on Bitcoin? Have you seen this?
I didn't even know that was a thing. Is that a thing?
Well, people have kind of hacked it in where you can just put Bitcoin block size and put pictures and videos and stuff. And it's causing quite a shift between people who are, thinking that this is a hack and this should not be done, and people who are excited by the new technology now that Bitcoin has NFTs.
So this is an NFT?
Yeah, correct.
Oh, nice. So before we turn on the mics, we kind of walked through, I think, 5 different topics that you think will shape the market over the next, in the medium to long term, ways in which it'll change fundamentally. Let's walk through those.
Yeah, it's sort of not necessarily things that will shape the market, but things that will be looked at as default, which right now the market is very far away from comprehending or understanding. Because, this is a new industry. Everything is still relatively like Wild West, and the sophistication comes over many years and over time. But there are some things that I just find shocking, like, why is nobody else realizing this? And we just, like 99.9%, just assume that these are like normal things to talk about.
So it's things that people think are normal today.
Correct.
Take for granted, think are almost unchangeable that will change.
Yeah.
And people will think in the future, how did the market exist in such a amateurish state?
Yeah, they're going to look back at us in 10 years and just be like, those 2022 guys, like, what were they doing? Like, how were they thinking about this?
Yeah. So what's the first pillar?
This has been an ongoing education in the market over the last couple of years, and obviously very relevant to everything that's happened. But the concept of yields and APYs, and especially the difference between a yield that's given on dollars or like a dollar stable coin, which we can assume is equivalent, like, USDC yields and treasury yields in the traditional world, and comparing that to yields on not just things like Ohm, that give you 300% yields and these kind of things. Even Ethereum, like Ethereum yields are being compared to dollar yields. And they're saying like, oh, it's 5.5, which is more than the treasury yield, which is 4.5. So this is like a better yield return. Nobody kind of pushes back against this. And I just find this like a little bit amusing that this is kind of considered to be financially literate, when I think these two yields cannot be compared in any way at all.
And is that because of the risk, or just sort of where the yield derives? In what ways should they not be compared?
Definitely, like you do have a very underlying risk curve that's very different, like whether it's Ethereum or any other stable coin. Those two things don't only have different risk, but they have different forward curve, is what it's called, which basically there's like an estimate of what this thing will be worth in a year, or in 6 months' time. You can kind of base that on the inflation rate, for example. If something has a higher inflation rate and these things will keep printing, then by default, people are more willing to buy it now and knowing that the price will go down in the future. So something like Solana, for example, like if it has a 10% staking yield, you can buy one Solana now and have 1.1 in a year's time. That means that the price you should be willing to pay in the future should be lower by, let's say, 10%, assuming like nothing else changes. That's different for every asset. And so you can't compare yields for different assets. They just have inherently different forward curves. So, I mean, like you asked, like these questions are fair questions, but they do have answers. Like they should be priced differently. And something like Bitcoin, for example, also depending on which part of the halvening cycle we are and what the current inflation is, the price of Bitcoin being treated as a yield is different than the price of Ethereum being treated as a yield. All these things are just inherently different based on their inflation curves as well.
And it's not super easy or makes sense for someone to sort of transition or move from treasuries to ETH. Like they're just not going to make that switch, even if the one yield is more attractive than the other.
Yeah. I mean, the most common equivalent thing in the traditional world is maybe like dividend paying stocks. So like if you own some utility company or something that pays a 3% annual yield, some people do compare them to owning treasuries. And they say like, well, both of them pay 3% yield. Of course, in one case, you are taking underlying risk of a company and what that company's like valuation will be over time. So that's the closest we have that I would say like is a mental model. But in terms of like yields in general, we've seen many times that people get awestruck by high yields, especially on non-dollar coins, and invest based on those. So I think this will be kind of laughed at in the future and already is slowly starting to get kind of figured out.
Okay, what's the second pillar?
So another one is like...
And this is all going to be a thread soon. So listeners of the show are getting a first look at this thread.
Yes, correct. So the other one is like how to deal with, monetary premium and this concept of like money and meme coins and how that ties in, where I would say like meme coins are the attempt to create money or to create like a monetary instrument that has monetary premium, because we all know that there's no actual like fundamental cash flow that's going to be associated with a dog coin or, some kind of funny...
I almost think of them as being like more liquid, fungible NFTs. Like people buy them and they have value because they're funny.
Definitely, that's true. But, first of all, NFTs are strictly better at doing that because you get something that's unique. You can choose which one you want. Like there's different ones. So if that's kind of like the value, it's like the NFT value, then something fungible actually loses that value. It's like a lot worse. Mm-hmm. So you might as well have a community of, doodle holders or miladies or whatever like your favorite one is, mm-hmm. rather than just some token that can be kind of printed, and they're all fungible. They're all boring, the same. Dogecoin obviously was the first one that was the attempt, I would say, to create money. But these things will be proven over time that they actually never last. You can kind of have cycles of them coming in and out, but they're not actually a sufficient way to store wealth. And that will be proven over time.
There's a lot of billionaires who are big fans of dog coins. Mark Cuban, Elon Musk. Now, are you saying, do you think that in, let's say, 10 years, none of them are in the top 10? I mean, right now, I think both Doge and Shiba Inu are higher market cap than Solana and Aptos.
Correct, yeah.
Which is pretty crazy. And so in the future, we'll look back at that as being absolutely batshit insane.
Yeah, the value right now is the novelty value. Like, these things just got created. It's funny. It's the first time we hear about it. Like, oh, haha, this thing, of course, has no value, but we're going to make value because it's funny. And then enough people think that so that, they kind of congregate together and they pool a bunch of money and then it actually has value. But it doesn't last. We've kind of like seen already, trends where that doesn't last. And I think over time, it'll be less novel. There won't be like any novelty, and NFTs will replace that as being a superior form of community-driven monetary premium, if that's going to exist. So I think the actual fungible meme coins will fade out of existence.
Post-meme clarity will come into the fold. What's the third pillar? Fees are going to come down. Why are we paying all these crazy fees?
Why are we paying all these crazy fees, Frank? I mean,
I'm not. Well, I think that like conceptually, it's because the job of custodying, facilitating the trading of crypto is harder than traditional U.S. equities. And so as a result, they can sort of support those higher commissions or reason for them to exist. But
yeah,
but that'll change.
It will change, right? Like over time, like education comes in, there's more options, and there will be a race to the bottom in terms of fees, and people will be a bit more sensitive than they have been. I mean, certainly, I remember paying very high fees in the past on Coinbase, years ago when that was the only way to quickly buy some Bitcoin. It could even be like 50 bips, 100 bips. Now, I am personally averse to paying more than a few bips, given all the options that are out there. And I think, people will increasingly come around, just like they did in the stock market. Those fees came down a lot. We got Robinhood, we got other things. There will always be a segment of the market that doesn't care. I mean, I go to like the Vegas casino sometimes, and there's a roulette with a single zero. And then right next to it, there's a roulette with a zero and then a double zero as well. So it's obviously twice as much fees. And people like to play that one because they think it's lucky. There will always be like unsophisticated people that are completely fee agnostic. And, we have to be realistic. Like a lot of crypto is a casino. I kind of view like the different exchanges as different casinos on the strip. I guess there will always be some people that are agnostic to whether they're paying double or triple fees.
I'm sure someone like Gary Gensler would agree with you. These are just degenerate houses of gambling that don't add any real value to society.
I mean, society loves casinos. Like there's tons of them everywhere. So there's clearly some kind of value being added.
Do you think that there will be real world use cases? Will crypto sort of, at what point will it sort of escape its cycle of, this feedback loop into itself that never really touches the outside world?
I think it'll trickle in. There was a tweet that Matt Huang, the founder of Paradigm, had that I liked, which is basically saying that the crypto world is a Trojan horse that has a new financial system inside it, and it looks like a casino on the outside. So elements of it will start to kind of permeate into like mainstream society and not just kind of like the gambling side. I do think like there's other things going on as well. Like clearly young men are driven very strongly to crypto, and I have a theory that is very much around the fact that it creates a possibility for, it's kind of like sports, people will go to their local playground and shoot some hoops or kick a football around, European football. Similar to that, the crypto world and all the games and the NFTs and the collectibles and all the different ways that we can kind of compete with each other is like a financial sport in a way. And society does value that because it It's a training ground for young men to kind of like go up the ladder and figure out against each other and see who's better. And, I think there's like an inherent biological desire for that type of competition and that type of, financial sport. And there is no better financial sport playground that we can all join than crypto.
Layer one wars battling out for supremacy. It's very dramatic.
That's one sport, the layer one sport. There's the NFT, which collection is going to go up and which one's going to go down. That's a different sport as well. You can kind of compare these to volleyball and like different sports that people can get into. So there's one for whatever your pleasure is. There's a sport for you as well.
So what are some of the key game theory concepts that are relevant for understanding the crypto market?
Game theory is all about like what are different contestants doing? Like what are they going to do and how do you respond to like their strategy? So a lot of it is like group psychology, understanding, if there's a tension put on something and attention congregates, like how will people react? Who's going to be first to sell? Like if everyone's kind of holding something, but there's only limited liquidity to get out. So game theory will look at situations where there's different individuals, but they're playing a game together. And there's certain equilibrium that come out of that. Like if there's limited liquidity for selling something and they're all holding it, who's going to sell first? And, are they going to wait for each other? Are they coordinating? Is there a reason to coordinate? Some of these concepts are very relevant for the crypto markets. And then like on the more fundamental level as well, if you consider that, there's the government, there's the regulators, and then there's kind of users. And in the middle, you have exchanges and other providers. So there's this kind of dance being played as well that's very like relevant to game theory between all the different participants and all the different countries. If they ban it over here, game theory stipulates that actually there's going to be so much demand that will get satisfied by another country providing it, that maybe it's actually not good for the United States to ban and assume that this is going to go away because it'll just drive. It's not going to stop crypto from developing. It'll just drive it somewhere else. So understanding these things kind of gets to the heart of, figuring out what the future of crypto is going to bring.
How can game theory help us understand dynamics such as short squeezes like the one that happened with APT?
Yeah, that's a fascinating one. So you have individuals that are putting their money at risk in order to try to kind of short squeeze a token. And then you have people who know that this is going to go down, know that this is like not inherently valuable. So they're trying to position to profit from that, but they kind of add fuel to the fire. For that, game theory is extremely relevant because you kind of have to find the point at which the short squeeze is going to fall apart. And that's the coordination problem. Like ultimately, some of these people are going to want to take profits, especially if the foundation, which is like another game, like, the people who have tokens to sell, come in and they say like, oh, thanks for the 10x guys. Like we're going to sell you like a few % of our treasury and cash it in on this thing. So they're another part of the equation. So you have people going long, people shorting, and you have, this nebulous holder of tokens that can at any point come in and like stop the game because they'll just like cash out. So everyone's looking at each other and like figuring out what the right timing is to get involved. So that's kind of what we're seeing with Aptos. I think, it's short squeezed very successfully, and it's kind of gotten to the point where some people will want to take profits.
And you sort of alluded to the ways in which potential regulatory intervention in the crypto market can be impacted by game theory. Maybe what regulatory headwinds are you most concerned about?
I mean, not too concerned unless, countries manage to like do like a huge coordination with each other, and, all the major economies come together and say like, we're going to just say this is illegal and nobody can do it. And then, it will still exist, like crypto will still exist, but it'll be smaller. It'll be like a niche thing that's only supported by certain countries. So I think that kind of stops that from happening. The main concern with regulation is like bad regulation that doesn't really accomplish a healthy development of the system and sort of continues to allow scams while not promoting like useful uses of the technology. And you can see that central banks are incentivized to stop any idea of crypto being considered a competition for fiat currency.
How do you think Ethereum performed post-merge compared to your predictions?
Pretty much exactly like as predicted. There was a sell-off after the merge instead of a pump through. People like Arthur Hayes assume that there's no kind of dump after the event. Like this will just kind of the supply squeeze will keep going. And in fact, there was a huge correction. Almost 80% of the highs, or maybe more. And then, like I said, I'm long term. I am bullish. I do think like eventually there will be a supply squeeze in ETH. We will run out of tokens eventually that people are willing to sell, and we're seeing signs of that right now. Although it's not necessarily ETH that's running up; it's the entire market. So I think we're still a little bit away from the point at which the supply dynamics really kick in.
So it's unclear if it's just sort of riding the broader wave.
It is clear. It is just riding the broader wave. Like you can see that it's underperformed Bitcoin. Okay. Bitcoin has performed better than ETH in this kind of run-up. So we have not yet reached the point at which the meme of deflation and supply squeeze actually has fully realized its value. I do think that in the next bull market, we will have that be a central part of the bull market, and people will kind of use that as a Ponzi-nomic to rally around. And it's a very powerful one.
The core promise of crypto hasn't changed. Stablecoins can bring faster payments at internet scale, from merchants at the point of sale to corporations that want to pay suppliers or even employees more efficiently.
Circle has always seen itself as a connector of the traditional world and the new world of digital currency.
USDC is more than just a stablecoin. USDC is also an open source platform.
When our transactions actually final and you can't change them anymore, that's another great quality property of cash, because when it switches hand, it's final. Right? Can you digitize all those good quality properties and bring that in a digital form?
USDC by Circle is at the forefront of this innovation. And that's why The Scoop is partnering with the folks at Circle to tell you guys why and how our industry is moving.
A lot of us who have built USDC, myself included and Jeremy included, we are technologists. So we approach this problem from a technology point of view.
Have you ever wanted to use DeFi without being seen? RAILGUN is a leading DeFi privacy solution on Ethereum. And it's also a leading privacy solution operating across Binance Smart Chain, Arbitrum, and Polygon too. Shield your funds and use them privately on your favorite DeFi apps. RAILGUN's cutting-edge zero-knowledge system encrypts your data from public view. And yes, that includes DEX trading. DeFi and privacy together at last. Visit railgun.org to find out more. This episode is also brought to you by Flare, an EVM-based Layer 1 blockchain with secure access to information from other chains and the internet. Flare's State Connector acquires detailed transaction data from blockchains and information from Web2 APIs in a decentralized way, so it can be used securely, scalably, and trustlessly in applications running on the network. Paired with the Flare Time Series Oracle for decentralized price and time series data, Flare delivers a developer-focused blockchain with secure, native access to more off-chain data than ever before. Build better and connect everything at flare.network. What do you think's behind this rally? Is it just, again, the broader market? Or there's some unique elements that are making people feel more bullish? We saw yesterday, Pantera said that they are rotating back into alts after sort of finding safety or safe haven in ETH since the spring. And now they're rotating out of ETH. So it seems like people are becoming more constructive on the market overall. But what's changed? Has anything fundamentally changed that we can point to?
Yeah, I saw the Pantera presentation, and kudos for them for publicly showing that and letting people know where they are. I personally disagree with what they're doing. I think that the alt-ETH ratio is actually not going to go very well. But that's why we have a market, so people can express different opinions and take different sides. For me, it's only two things. It's one, it's the general broader liquidity and equity markets are doing well. So crypto is following that. And that's the largest part of it. And then the other 40% is this kind of wall of worry that kept a lot of people completely sidelined. There were a lot of people who thought after FTX that, we're just done forever. And then the DCG thing created this shadow that stopped a lot of people from getting back in the market. I think the rally we've seen is people realizing that whether that gets sorted in one bankruptcy way or another, it doesn't actually matter that much. There is still fundamental desire for people to have these tokens and invest in this technology. So it's so simple. I don't ascribe any extra value to it apart from just, it got oversold. People were worried about stuff and they calmed down, and now they're getting back in. But I'm not super bullish on this extending very far. I think the broader market and the broader macro is still dictating the larger moves.
So what do you expect to happen next? Just sort of sideline?
Yeah, I think like the Fed is going to kind of show that they mean business. They do intend to keep asset prices lower. They will tighten as much as they have to make sure that there is no like new wealth effect that starts inflation up again. And eventually, crypto markets will keep the same trend line. They'll just kind of go sideways for a period of time. Unless like a new use case emerges, it'll kind of be sideways.
Yeah, I wouldn't anticipate that. So how much is the Fed going to hike rates this week?
They're going to hike 25 bips tomorrow.
Not 50?
No, they're going to do 25. They'll do one more 25. And most likely that'll be it for this cycle. But that's already getting us to 4.8. And they'll leave it there for the whole year, which is not going to be very helpful for risk assets.
And crypto will continue to strongly correlate with equities. There's nothing that's going to change that dynamic.
I think like overall, we've had a good bounce. Crypto can outperform equities in general. There are reasons why it can do better, but it's not going to run away. We're not going to go back to like 3 trillion market cap type of stuff. That was completely unsustainable. I do expect majors to outperform. And like I said, I disagree with the thesis of rotating into alts right now.
Mm-hmm. Outperform just the broader market.
And
broader crypto market.
Yes, definitely outperform altcoins as well. I think Bitcoin and Ethereum will hold value a lot stronger than a lot of other tokens.
What about the broader just equities market?
I think equities will go back down. We'll have like quite a retest of the lows over the year, and especially like in Q2. I don't think it's going to go very smoothly. I don't expect a cataclysmic collapse like some people are kind of expecting below 3,000 on the S&P. I think the range that we'll see is between like 32 and 3,600. We'll retest that range.
Oh, interesting. That'd be good for the podcast listenership base. Get back to 32. Those are serious. We were doing serious numbers back in those Hasleon days.
I think you're talking
of the Pico.
Are you talking about 32K Bitcoin?
Yeah.
Oh, I mean 3,200 on S&P. So I'm sorry to disappoint.
Oh, that's disappointing.
Yeah, sorry to disappoint. I think it's going to be hard to get to 32K Bitcoin very soon.
Okay. All right. Well, that long S&P. On a long time horizon, are you more bullish on Ethereum or Bitcoin?
On the midterm, I'm more bullish on Ethereum. Like I said, I think the market hasn't priced in the supply dynamic, and I think that's going to be very powerful. And also, like Bitcoin is a little bit of a mess, unfortunately. I love Bitcoin, but I can see that the culture of it is very fragmented. You have the orthodox Bitcoiners who say everything else is a scam, and they're very resolute about certain things. Mm-hmm. There is no coherent kind of thesis around what this asset should be. I think that will solve over time. So long term, I am more bullish on Bitcoin, but in the medium term, I think there's a lot of things to iron out in terms of what's the long term security model, what exactly is the value that collectively like we want to put on Bitcoin. Those things have not been answered. Ethereum hasn't answered them either, but at least there's like 2 simple things that are better. One is the supply dynamic. Obviously, deflation is going to be quite powerful. And the other one is the L2 ecosystem is currently having a lot of attention. There's a lot of new L2s. And I think that's going to make Ethereum as an asset more valuable as well.
What advice do you give to people to help them understand how the crypto market behaves? Like when people ask you, help me make sense of this chaos or seemingly chaotic environment.
I think a lot of it has to be seen as optionality. Like a lot of these tokens, including the big ones, including Bitcoin and Ethereum, they're options. And you have to understand like what gives an option value, like what gives it this premium. Because, a lot of people are looking at crypto stuff and they're like, why is this thing priced at X billion? I don't see anything like significant happening. And usually what they're missing is, even for something like Ethereum is an option on all the future apps that can be built and use that platform. So if something comes up in 10 years and it ends up getting 1 billion users, having ETH as an asset is an option on that upside. You get a call option on that upside. And Bitcoin is a call option on it being, an alternative to the fiat financial system. Like if the world really starts demanding, fiat is crap, we want something else, Bitcoin is a call option to that. Layer ones, like I said, they're all call options to certain technologies being used or certain communities being built. So looking at it in that way makes a lot more sense. You can definitely go overboard if you don't do some analysis of what your option is. Like something I've been publicly asking people to be a bit more careful with is the current mania around liquid staking tokens like Lido and Rocket Pool and these things. I find it a bit disappointing that very few people have actually tried to do any maths and figure out what is the right valuation for this thing. Like how many ETH is this going to accrue, even in the best case scenario? And right now, if you add up all the market cap of these tokens, they assume that they have, 500% of the market. And obviously there's going to be winners and losers, but you can't assume that everyone's going to win. And I think people are treating it more as a meme coin rather than a financial instrument. And I would encourage a bit more analysis.
So what would a breakdown of that analysis look like?
So for Lido, for example, you say, okay, why is this thing valuable? Let's say it's going to accrue, 4 to 5% of the yield that's generated using this token. It's not very hard to look at the best case scenario, which is 100 million ETH gets staked out of the 120 as that deflates. Basically, everyone's staking ETH and everyone's doing it with Lido. How much revenue is that going to create? And you say, okay, well, the yield's going to be 1.8%. That's kind of what's hard coded in the system. So you'll have 1.8 million ETH a year. So over the next 10 years, you'll get 18 million ETH, let's say, kind of paid out. And what percentage of it will actually go to token holders? A couple percent of that. So why is this thing valued as if, there's 20 or 30 or 40 years worth of ETH kind of accruing? And we don't even know the future. I think one thing that will also kind of seem strange in the future is that people right now assume that the apps and the tokens the exchanges that are being used are the same ones that are going to be used in the future. What history has shown us is that every couple of years, there's a massive switch between shuffling. Like the top exchanges are completely different. Top apps are completely different. Blockchains are going from top 10 to 0, like we saw with Luna, for example. These things are so dynamic that if you're pricing in 20, 30 years of income on something, that's not really the right mental model to use for a lot of these dynamic things.
Yeah, especially given what's happened historically. Like the top 3 coins outside of ETH and Bitcoin in 2017 were what? Litecoin, Bitcoin Cash, and then what was the third one? They're called ghost coins now, right?
Dinosaur coins?
Yeah, they're dead. IOTA was in top 10. Now it's 70 or something. And then last year, right? Or at least during the last cycle, it was Solana, Avalanche, Luna. And then we've seen sort of Aptos come into the picture. And obviously Luna's donezo. But yeah, the market's it's definitely going to do a reshuffle.
Yeah, I mean, life comes at you fast in crypto world, much faster than any other industry. So the right way to invest and to construct your mental model of navigating these markets is just be very clear on which things are fixed. Let's say Bitcoin ETH, which other things are actually going to just rotate around and flip around. There's going to be a new one and people will just get attention. Which things are driven by attention. So for example, even exchanges like GMX, which don't have any moat, they just have attention right now. It is not difficult for that attention to go to some other exchange because they're not even using liquidity. It's just sort of a front end that's using an Oracle price. So I think these things will shift very quickly. And next year, we'll have completely different attention grabbers. Just like a year ago, we had Axie. The whole world, third world countries were playing Axie Infinity, and they were using STEPN, they were using the app STEPN. And then the valuation of these things was just assuming that, for the next 10 years, everyone's going to keep playing these games. And, a few months later, it's already finished.
I miss those STEPN days, just walking to get a bagel and making hundreds of dollars.
You can still make 10 cents.
That was the high golden age of crypto. Should have known that was the Pico top when people were making, hordes of money from just walking.
It was the novelty concept.
Yeah, it's kind of gimmicky. But they actually had an interesting roadmap when I talked to them. It's just just the level of mania was misplaced. It's not like the idea is totally silly. I like the idea of adding an incentive to running, because it's sort of like when I run, I think about time, distance. So if you incorporate or roll in, okay, making X amount of money, it's just another lever that you can pull to like push yourself harder.
Absolutely. I mean, I pay a personal trainer just to be there. So I make sure that I show up because I paid $100. So I need to show up.
Yeah, exactly.
It's a good motivation.
And you look great for it. So there you go. Walk us through a little bit about the firm and how you're sort of positioning yourself for 2023. Are you trying to sit in stables for the most part and sort of, invest prudently?
Yeah, I mean, we have like two sides. First one is market making. So that's kind of market neutral. We just provide liquidity in different venues. We're providing liquidity in DeFi and different exchanges. So we don't take like a strong view of markets there. We just try to help. You've seen how thin the books have gotten and how quickly prices move up and down. A lot of our competitors have kind of exited the industry. They've found it too hard to deal with all the risk and all the kind of competition that's come in. So I guess we're very keen to continue to try to create thicker books and give more liquidity to people and like reduce slippage on that stuff. The other stuff we do is we do a lot of venture. We love crypto. A lot of our devs are young kind of DeFi devs, crypto native, and we like to get involved in helping DeFi especially. We're more on that side than the GameFi side. I think we understand that a lot better. A lot of us have kind of TradFi backgrounds. So, right now we invest a lot of seed rounds for new projects that we think are exciting, like DeFi exchanges, even like the old ones. So we're actually participating as a firm in Synthetics, which is one of the OG kind of projects. We want to help kind of bring them back up to the top. And I think we're the first firm to get a seat on the Spartan Council. So Selini Capital now is one of the 8 seat members, and we have some ideas for how to help that grow. And it's quite an interesting roadmap they have. So that's been cool to get involved as well. We work with a variety of DAOs. We work with DYDX. They're doing a very exciting move to an on-chain. So they're not decentralized in name, but actually decentralized. They want to have everything in this kind of new Cosmos app chain. So we get involved in that. We just love to get into this stuff.
What are they calling it? The Alameda liquidity gap. Has that improved at all? Or is it worsening? How would you describe the state of liquidity?
On-chain or in general, like a centralized exchanges?
In general.
It's still quite low. Right now, a lot of people have switched off and sized down. I think that's going to stay the case until we get a lot more users and then profits go up so much. I mean, what happened last time is 2021 started. There was so much demand for trading and liquidity in tokens that everybody who was already there, even 2 guys in a basement coding by themselves, they could make a lot of money because the amount of demand was so much higher than the supply of liquidity. That changed over time. We've had less demand and we've had more people come in. Citadel came in, a bunch of other serious firms have scaled their operations, including Jump, including Tower, these kind of places, traditional finance places. So the supply demand imbalance is right now at an equilibrium, and people think, there's a gap, things are thin. And I think that's going to remain the case until there's another huge spike in demand.
So tread carefully out there in those waters. Be safe out there, folks. Well, Jordi, really appreciate you taking the time to come on the show today. Any closing thoughts you want to leave us with before we wrap up?
I mean, my advice to people that are interested in crypto and exploring the space is try to be as active as possible. Try different things. Don't kind of get stuck in the same routine of just, following the same people and kind of doing the same type of trades over and over again, or being in the same Discord. Just kind of play around. Try to use different chains, try to do different stuff, try to get airdrops in different places. This airdrop thing is quite interesting. You have this situation that's very unique in crypto where giving away tokens increases their value. That's not normal. Normally, if there's a company and there's shares, if you start, giving shares and airdropping shares, it's going to decrease the value. But in crypto, because it's very community driven and very attention driven, we have this weird effect where having an airdrop and giving it to a bunch of people, what you've done is increase the ownership and the distribution of the ownership. and you've created a lot of incentives for people to use this thing now because you've given them like upside in whatever product. So especially if the airdrop has a little bit of like it's like locked, so you can't sell it right away. Maybe it has some vesting schedule. That's such a unique dynamic that creates upside for everybody. So I would say like value your attention, get paid for your attention. And, one way to get paid is like using something, getting an airdrop for it. And understand that your attention is the product. So having that mindset will open a lot of doors, hopefully.
It's a very Web3 mindset.
It's Web3 mindset. I'm less focused on, having your followers and tokenizing your followers, but just understand that like, attention is important and you should value it highly.
Good parting advice. Thank you, sir.
Thank you.
Once again, we've been joined today by our guest, Jordi Alexander, Chief Investment Officer at Selini Capital. Where can listeners learn more about you and what you're working on?
Best place is Twitter at Game Theorizing. I also have a Medium that I will be trying to flesh out more. Right now, it's once a quarter. I'll try to have a few more articles coming out this year.
Fantastic. And I'm going to ask you to pay me to read them because I'm valuing my
As
attention.
you should. I will create
I want to get the Selini airdrop for reading your Medium.
There will be a Jordi token airdrop to you, sir.
Jordi token. Thanks so much.
Thank you.
Take care. The Scoop will be back for you again with another great guest. Have an awesome day. Looking for more great insights from The Block? Meet The Block Pro. Powered by the industry's most entrenched team of reporters and research analysts, The Block Pro provides research, news, and data in one easy-to-use platform for institutions evaluating opportunities in digital assets. For more information about how Pro can help you and your team make smart decisions, visit theblock.pro today.